Welcome to the Credit Clubhouse podcast, a deep dive into the world of credit markets and alternative finance. Before jumping into our next episode, we have an exclusive offer for our listeners. Just head to dealcatalyst.io, pick any event, and then enter the promo code CREDIT at checkout. This will provide you 10% off any ticket to any conference. This offer is limited to the first 50 ticket buyers. Don't forget, we want you to follow the show, rate us, and leave a review. We encourage your feedback, and we want to hear from you, the listener. The next episode is presented by 9fin. Every day, you're making decisions that matter. Which credit to buy, which deal to pitch, which covenant terms will hold. You need the right intelligence, you need it fast, and you need to trust it. That's where 9fin comes in. One AI-powered platform with complete visibility across public, private, and distressed credit, built for how credit teams actually work. Head to www.9fin.com/demo to request a 30-minute personalized demonstration. Again, that is www.9fin.com/demo. And now, on to our next episode. Welcome back to our latest installment of the Credit Clubhouse. As always, I'm your host, Todd Anderson, head of content and programming at Deal Catalyst. Joining me today are Russell Korn and James Devey from Fulcrum Diligence. Guys, it's nice to see you again. Really appreciate you taking the time, and looking forward to our conversation.
Hey, Todd. Nice to see you.
So, the conversation today for the audience purposes is going to really focus on kind of fraud and due diligence. But before jumping into, the kind of the meat of the conversation, tell us a little bit about Fulcrum. How'd you ultimately come up with the idea? What is Fulcrum Diligence? Maybe just give us a little background.
Yeah, sure. So, look, I was in the military till 2003, which is a long time ago now. And I got out of the military and joined Prudential, the big global insurer. And I was working in their security team. And then I began in that role to buy due diligence and investigative reports on our counterparties around the world. And I was pretty shocked by the quality and the cost. It was very expensive and very poor quality. So a couple of years later, I thought, well, if it is that bad and that expensive, there must be a business opportunity. And I joined a former colleague of mine at a company called Diligence and was there until 2010, and then kind of went solo in 2010. I worked alongside a law firm specializing in the Foreign Corrupt Practices Act and the Bribery Act, white collar crime. And then 2016, 17, my COO and I, that's Esther, decided that there was a gap in the market, and we felt very strongly that people can kind of get online and they can Google, and they can use certain search engines, WorldCheck, Factiva, Exeger, LexisNexis, all in the news at the moment because of the hammering they've had due to Claude Opus being released by Anthropic last week, and maybe we'll talk about AI later on. But I kind of felt that when you use those platforms, they actually give very poor results on the whole. You get a very difficult to interpret version of someone or a company. And they're very, very compliance specific. And Esther, my COO, and I felt that the gap in the market was essentially for very, very good, objective, fact-based research that was pretty agnostic about sector or geography. You essentially take, and James is one of our excellent analysts, we've got 20 odd analysts, you put them across data that we know we can find, whether that's behind a paywall or through a platform or on a corporate registry or in court records or in media records, wherever it might be. And you're doing an intelligence job trying to understand who Todd Anderson is. Does Todd Anderson stack up? What is it about Todd? Can we rely upon him, or is there things in there that, a potential investor would kind of be concerned over? And that is the genesis of Fulcrum Diligence. So 2017, we split from the law firm, set up on our own, and we're now 2026, 20 odd people, good turnover, great clients, and they like us for the fact that we sit in this kind of objective fact-based research slot. We don't do too much what I call rumor control, human intelligence, subjective. My granny told me Todd was a great guy. We're very much more kind of, well, actually, there's a court record saying Todd was done for corruption in 2021, and that's irrefutable. Whereas, your mate's granny didn't tell me that. So that's our method. That's how we present ourselves to the market, and yeah, we enjoy what we do. We always come up with something. Put it that way.
So, moving the story to closer to obviously the markets that we cover here, there were a couple of names late last year. I'd probably say more on the backside of last year that kind of really sucked up the oxygen in the private credit space in particular. And those were obviously Tricolor and First Brands. You guys put together, a report. Ultimately, I believe it was just on First Brands. What did you uncover with that report? What did you find?
Well, let me give the context first, and,
Yep,
and then
that'd be
I'm going to
great.
hand over to James, who is the lead analyst and really got into this. So the context for our involvement is essentially an owner of a company, and the Patrick James proposed to buy that company, and it was an auto products manufacturer. Everyone became familiar with what First Brands did, and the client effectively found himself uncomfortable with what he was seeing of Patrick James with his Google checks and his kind of like, who is this guy? So he rang
Yeah.
up and said, and I've worked with that company for very many years. And they said, look, there's something about this doesn't stack up. This guy we're selling to, we're just a little bit uncomfortable. Can you have a look? And that, of course, is the segue into James having a look and finding a very interesting picture, which we'll talk about in more depth. But let me hand over to James, and he can talk about what he found when he first was given the instruction. Hey, James, have a look at this guy, Patrick James, and his company.
Yeah. So yeah, I mean that was kind of, I would say, two years ago now. And obviously at the time, this is well before it all came crashing down. So the most notable thing, when you kind of stuck your, started digging into it, was that there was nothing. There really was nothing out there on Patrick James personally. There were kind of very like obvious, the stuff that would come up now very obviously is AI generated kind of articles about, what is the best, auto part for your specific car, nominally under the authorage of this Patrick James, which obviously was entirely nonsensical. Outside of that, no photos of him, very few details on his corporate history prior to First Brands, and even the story of First Brands was incredibly, there was very little detail about it. But what did surface, and again, you get this just through kind of digging around just on the web, were two lawsuits in the late 2000s, wherein creditors alleged a kind of a series of practices which for any future lender would almost certainly raise a red flag, which included the misstating of assets, going bankrupt, having transferred collateral out of the companies which were borrowing money. That was the picture that was given by two lawsuits. Now, obviously, these lawsuits, they were settled out of court. There was no conclusive, fraud has been done or anything like that. But by going further than just reading the web page, the press releases or whatever, getting stuck into the legal records as they existed, really giving a picture of what exactly was going on, it became pretty clear that this was a pretty significant red flag. From there, it became clear that we needed to go deeper. We read the basically kind of scanned records of local newspapers in Ohio where his businesses had been operating in the 2000s, which made clear that a couple of manufacturing plants that he had owned had kind of abruptly collapsed, leaving people, mass layoffs, creditors unpaid. I think there were grants from New York State that were kind of violated by the, they should have been paid back because he'd violated the terms of them by the firms collapsing. We were doing, kind of went onto Facebook groups of former employees at these firms. We reached out to ex-employees who were very firmly giving us a no comment. We reached out to a journalist who said even writing about a kind of a purchase of one auto parts firm was like the hardest story he'd ever had to write because it was just so obstructive throughout. And from here, we coalesced this into a pretty clear picture of someone whose pursuit of absolute secrecy, a kind of just complete, not just my private life is off limits, but rather complete and utter secrecy over their, commercial career, was hiding significant red flags as to their conduct, particularly as it came to borrowing money. And that from, we were unaware as we did this of the scale of lending to it. And so when it all came crashing down in late August, September, Russ and I sat there and went, "Oh my God, it's First Brand." So of course it all came crashing down because, as far as we were aware, this was a firm that should not have been receiving, billions of dollars worth of credit. And so from there, I spent a lot of time reading about private credit and, reading the FT and Bloomberg and whatnot. And I talked to a couple of people who worked in the industry, and it became clear to me that, there's a reason why, this was able to happen. And that is kind of, I guess, what we'll discuss now.
I mean, a couple of questions come up from that. If you even widen it out beyond this individual person, how common are some of these issues, whether it be what their online presence is or isn't, or you mentioned Facebook groups and lawsuits. Is this case an instance of, hey, this is an anomaly, or are there other things like this in the market and people just aren't digging because either they are they know the CEO and it's, hey, I know that CEO, let's get the deal done, it's relationship based, or we have a lot of capital, we need to deploy that capital, let's get the money out the door? Like, where does some of this cracks begin to form, and then you ultimately end up lending to someone like this and then it all comes crashing down? Like, how common are some of these issues? I mean, you guys do due diligence, for a living. Where does some of this land?
So it would be wrong of me to suggest that it's commonplace, bearing in mind we're not unlikely to be instructed unless there's a problem, in that we do a lot of pre-investment due diligence just as a matter of practice.
Yep.
For our clients who've become used to saying, you guys take a look at it. You've got no skin in this game. We're relatively cost effective. Why wouldn't we have a look at it? Because often when our clients have seen our work, they're kind of like, hey, just get those guys to have a look at it just in case.
Yeah.
So I wouldn't suggest that it's endemic in any market. Of course it's not. But going to what you were saying, I think there is the opportunity to exploit a situation, and that Patrick James is a highly intelligent individual. And I think he probably recognized the utility of exactly what you've just referred to, which is a combination of, we know the guy. Number two, the next lender comes in and says, look, those guys have already lent to him. What's the problem?
Yeah.
Then Credit Fund 1 has already lent to him. Credit Fund 3, 4, 5, 6, 7 have followed in. Now it's up to $500 million. Credit Fund 1 comes round again and says, well, we can't really get out now. if we did, it would start to kind of question why we got in the first place. And you've got Patrick James in the middle spinning plates, just ticking boxes all the time, just keeping them all in the air, answering the questions he's asked, satisfying, a level of compliance due diligence, let's call it, where if you'd run Patrick James through any normal compliance process, he would have come up green every time. As James has alluded to, there's very little out there about this guy, and certainly not enough to raise a red flag at a normal compliance level of, and let's not forget, compliance is, will I have regulatory difficulties if I lend to this individual? So there's the different questions there. Can I? Should I? And that is something we deal in all the time. Can I is compliance. Should I is a completely different question. And we're in with Patrick James. You could, but you probably wouldn't have wanted to. And so, yes, of course, you're asking a loaded question with respect to the fact that I think there's a lot of, we know this guy. We've been doing business with him for 5 or 10 years. It's the classic, everyone knows the issue of, I got a bank account, and because I've got a bank account, I could go to another bank and they gave me a bank account. And then 5 years later, I asked whether I could put $1 million through that bank account, but I'd only told them £100, $100 when I first opened it. And that is just really commonplace, where the banks then don't reassess. And I'm sure it's the same in the credit markets, and even more so in private credit, where there aren't perhaps the same, I don't want to suggest it's not as rigorous, but in commercial lending, there are so many gateways to get through, so many credit committees, so many layers of bureaucracy. In the big private credit funds, I think there's an urgency, as you say, to get the money out of the door and get it working. And that could well lead to a few blind spots around people like Patrick James and others. Greenhill's the obvious other one we had in the UK.
Yep.
Yeah. I mean, the kind of obviously purely the structure of private credit incentivizes long relationships. When it comes to asset-backed finance, it is, you want to build a relationship over a long period of time, offer a kind of revolving credit, and that relationship is necessary. But equally, you reach a point where, in the case of First Brands, I mean, Jefferies were massively exposed in kind of multiple ways through their private credit fund, and also working as investment bankers for First Brands. And at that point, you have such a commitment to the continued functioning of First Brands in this case, that any kind of, third party, let's look at it again, let's be a bit cynical, let's see how we'd think about this if we approached it for the very first time. It's impossible to achieve that kind of level of objectivity once you're already so kind of deep in that situation and that relationship is already built. And alongside it, the opportunity cost of not deploying capital is so high in the current situation, where you've got loads of cash and you've got loads of competitors who also have loads of cash. So clearly, kind of reached inflection points, certainly over the last few years, kind of a very peak. I mean, maybe it's not the peak. Maybe there's years more of private credit growth to come, but clearly there is a kind of bit of a moment of reckoning. And coming back to the question of how common is it, it's not that common. There are so many businesses that receive private credit, and only very few of them are going to be fraudulent. But the problem is, in the case of First Brands, Tricolor, Cantor Group, 777, and that Greensill and Stan back in the UK, it is the credit has stopped being quite so accessible. People, retail investors obviously blew out this morning of whatever it is, stopping withdrawals. Like, people, a fright has hit. And once that happens, clearly the frauds that are out there that remain uncovered are going to quite quickly become uncovered. And so, yeah, we could see a few more yet as more impressive people than me have pointed out.
There's a couple of things that you brought up when talking about the diligence in the report you guys did, and I wanted to just ask a little bit further about those. One was, online presence, and clearly in this case, it was a red flag given how little there was. What is, I guess, considered a normal online presence? Like, is there, hey, X amount of data points on a person, and it's like, all right, this person seems legitimate. Maybe they had something happen a while ago, but like, is there a typical online presence? And then second part of that question is, as we look at the balance of kind of privacy in this new age of everything being online, do we or not, show everything of ourselves, but then you have, the battle for privacy. Like, how do you think about these two things clashing, of someone that clearly wants to worry about their privacy and not too much getting out there, but also balancing that out with like a natural online presence? In this case, I understand it was clearly a red flag, but like, is there kind of a normal sense of this?
James, why don't you talk about what is normal, and then I'll talk about privacy, because that is a really, really fascinating point.
Yeah, I mean the kind of what is normal depends a lot, and in no way, and we're very strict on, like, we're not going to kind of make fake accounts and follow people who are on, who've got their private social medias and stuff like that. And that's not what we're interested in at all, really, unless there might be some kind of glaring conflict of interest.
Yeah.
What we are interested in is the kind of public commercial life. And in the case of Patrick James of First Brands, the issue was less so, oh, we can't find anything about his private life. The issue was he was a significant commercial figure whose commercial life was utterly hidden. Like, the kind of stuff of that there is, other than one kind of bio on a founder. He'd been the board member of a foundation, and there was a kind of 2-sentence bio. Not a single, no LinkedIn is the most obvious one. Like, who runs a business in this day and age, a significant one, without even having a kind of perfunctory LinkedIn? Like,
Yeah.
It doesn't give people information they can't find out themselves, but it's just a kind of basic level of, like, okay, here's this guy at the most straightforward level. I can look them up. I can see who they've worked for and what they've done. Like, you'd want to see that. It'd be nice to see if there's a photo of them and, a bit of a record of, what they say on their LinkedIn is true. If there's a photo of them at, whatever former company, you're happy with that. That's enough to say, okay, this person exists, and they work and they do what they say they do.
And I would think, especially at like the CEO level, I would think like CEOs tend to be quoted a lot. Like, there's lots of newspapers, like the CEO of a large credit fund, or like Apollo or Blue Owl. I mean, you see them on Bloomberg, you see them on these shows all the time. You see they're quoted. Like, there tends to be a naturalness of, like, A, getting in the news, and B, just being covered naturally. And that clearly threw a red flag, because there was like one article.
Yeah.
And
particularly given the like industry that he was in. Like,
yeah,
there is no kind of reason to have like absolute secrecy as the head of a growing auto parts firm. Like, there's no reason why all mention of him would be scraped from the internet or removed.
The secrecy of auto.
Yeah.
Yeah.
No.
Yeah, Todd, the kind of privacy question.
Yeah.
It's my belief that if you're going, you need to generate confidence. You need to make yourself available. And as James has alluded to, that you have an absolute right to privacy in your private life, frankly. Private life should remain private if you wish it to. There are plenty of people who splurge their private life all over open source and open media, and that's fine. But as James says, you do not need to offer visibility of your private life. However, if you are in the business of borrowing billions of dollars for your business, there has to be a presumption that you need to behave in a transparent fashion. Of course, by definition, transparency requires that there's something out there that you can look at. Transparency isn't invisibility, it's different. Transparency requires some verifiable facts, some position you've put yourself out there, you've talked about your business. What you've said about your business can be validated in objective, fact-based research. There's not a discrepancy between the two, et cetera, et cetera. So I think in this modern era of the argument over privacy, we can differentiate between commercial life and private life. And if you're very, very prominent in the commercial world, you're taking money from other people. And again, it can get quite removed when we talk about private credit, and it kind of feels like it's a long way away from you and I's pockets. But we all know it's your 401s, it's your money has gone into that fund and blown up. Somewhere down the line, every dollar that went in there came back to an individual. Somehow, some way, someone's pension got blown on that. And
Yep.
that's where I think you need to be, as a prominent individual, borrowing money ultimately from you and I, not some removed idea that it's an institution that doesn't matter. You need to accept that, well, I need to be visible. I need to give people the reassurance they require before they invest in my businesses. So you'll sense I'm very much on the side of privacy in your private life, fine, but transparency in your commercial life, please.
The other piece that you mentioned, James, when doing the research for this report was obviously the previous litigation that you had found, and I'm curious just about the question around litigation. There's lots of things that are either NDA or settlement, or stuff is out of court, or stuff has been in court. Like, how are some of these things viewed? Does time give you a kind of a sense of like, all right, this was so long ago that maybe it doesn't impact this? Like, it feels like there can be a lot of subjectivity in looking at some of this stuff, especially if it's not all equally public in terms of a court filing versus out of court settlement versus NDA that you might get a hold of.
Yeah, I mean, like, one of the things when it comes to litigation is that you have to be willing to spend a lot of time reading quite complicated or boring or whatever legal documents, and a lot of it is completely superfluous. And obviously, I've tried to kind of use AI and stuff like that to kind of maximize efficiency when it comes to reading these things. But so much of the time, particularly when anyone can look at the final judgment in a lawsuit that's settled. When it comes to issues like this, or lawsuit that's ruled on, like, that's fine. But obviously, almost all of them end up settled. And so quite often it requires spending large amounts of time reading quite closely the contours of the litigation. And that's much further than just, he sued him because of this and they sued back, but rather getting your head stuck in and really picking apart the allegations made. A lot of it is just kind of, I've read so many that you start to get the hang of it. And ultimately, I can't tell you that Patrick James did what he was accused of in the late 2000s. What I can tell you is that, two credit funds or two creditors who seem perfectly reputable were willing to make some quite serious allegations against him. And then he spent the next 15 years trying to cover it up. Like, it's enough to demand an explanation. And so, yeah, it's a combination of spending a lot of time reading stuff and digging around. It's a combination of knowing that you're never going to get the kind of final smoking gun of who did what and how it all resolved. And it's a combination of experience, but also it's like, if I can give the client the strongest idea of what has happened here, they're going to go into a meeting with the next Patrick James knowing which questions to ask so that they can receive the level of transparency that would be required to invest or lend, or pull away instantly.
Before we jump to the question around AI, because I think there's a lot of interesting things to dig into there and some fun around that. I did want to go to something, Russell, you had mentioned at the top, when you were at Prudential, and the cost of the research and how poor it was. Kind of what does some of that research look like? Like, what are the common mistakes? Because I presume these credit funds or insurance companies, they have billions of dollars under management. They're probably spending money on diligence. Is it the wrong questions they're answering or the wrong stuff they're looking at? Like, what was lacking in a lot of that research that clearly makes them want to go to either a Fulcrum or even someone else to then say, hey, we need a neutral party to look at this? Is it just misaligned incentives?
Good question. I alluded to it earlier. I think there's a disconnect between a reliance on compliance and the sense that the compliance teams in these organizations will flag an issue. So can I versus should I? I think there's a disconnect there. I think compliance are there to say you can, and yet there's a gap in should you. And should you falls to the deal teams themselves quite often. And there's probably a degree of arrogance, if I was completely honest. There's a lot of, we often get quite cynical. Well, I can Google, that's all you're doing, which massively underplays, personally 20 years of experience. And then it takes us 6 to 9 months to train an analyst to get even near where we need them to be in terms of thinking about, looking for, connecting the dots, doing really good intelligence work.
Yeah.
I think, unfortunately, my sector does err towards the whiff of cordite, if you like. It's a great expression for being able to charge a lot of money for not doing a lot of work. So if I can bring into you the sense that, I used to be in the CIA and I'll do whatever I do, I can't tell you about, but I'll come up with something that, you then rely upon. I'll charge you a great deal of money for it. And then your incentives are very definitely misaligned because you've paid me a lot of money, I'm incentivized to find something. And the find something is often going to be subjective rumor control.
Yeah.
Maybe he's a bad guy. I don't know. I heard from this guy and that guy. And there is always the whiff of cordite around that. The difficulty with it is it's very difficult to action. It's very difficult to be certain. It's very difficult to even present. If I was going off asked to look at Todd Anderson, and I got some kind of human that said, oh, Todd, not too sure about that guy. I can't sit opposite you, Todd, when I'm trying to assess whether I should lend you or not and say, oh, I heard some dodgy rumors about you. Because you're going to sit there and go, from who? How? What?
Yeah.
Whereas if I sat opposite you saying, hey, Todd, I can see a court case in 2016. You settled it out of court. Can you tell me about that? Well,
Yeah.
you're probably going to have to tell me about that because it's irrefutable fact, right? So,
Yeah. The level of the difference there is pretty stark in terms of how perceived the person you're sitting across is going to answer that. And
yeah,
when you can sit
yeah,
there and say, what is this versus I
yeah.
heard this, it's
I
definitely
heard,
a
I heard this
stark
is a
difference.
relationship wrecker, right? And as we
Yeah.
alluded to earlier, a lot of this is done on a relationship basis where there's a lot
Yep.
of private capital wanting to deploy. And I want to give it to you, Todd, because everyone else wants to give it to you as well. So, but I don't want to ruin our relationship by saying, I paid for some due diligence and, someone's granny told me that they knew someone down the shop that told me that you did this. And,
Yeah.
that's just not going to work. So, in answer to your question, well, it's why we exist, sales pitch, et cetera, et cetera, is there is a market for really good, objective, fact-based research and fantastically intelligent lenders in the private credit markets didn't do 6 to 9 months training to be an intelligence analyst analyzing and accessing open source that's taken us 20 years to understand where it resides and how to find it. So that's what we need, people potentially to accept that there are organizations out there that are capable of doing better research than they can. And that's a big one, right? If you're Goldman Sachs, you just think no one's as good as me because we hire
Yep.
the most expensive MBAs going. And you're like, well, actually, we are better than you because we don't do what you do. We don't pretend to be good at what you do, but you're not as good as at what we do as we are. So lots of interesting things there. You've asked a great question, but yeah, it's a constant struggle to to kind of overcome the assumption that everyone's so bright they couldn't possibly miss it.
Now to the topic of AI,
Mm.
because I presume people can also argue AI can answer that question we
My
just had,
my goodness.
but also AI can, on the opposite side of the table, can also create a story around the person that conceivably can create this online presence of, hey, I'm great, I'm trustworthy. And so how do you guys think about the double-edged sword of AI, which a lot of it is still what goes in is what comes out, and so ultimately what is the data that's ingested by AI, and it's clearly getting smarter, but it's not never going to be perfect unless there's perfect information put in. And so, how do you guys balance this rise of AI on both sides of the question that we've kind of been asking throughout this podcast?
But let me
Um,
go first. I'll let James talk from an analyst's perspective.
Yeah.
The questions you ask are really difficult because they have about each one of them has about five different ways of answering it. Um, my goodness, this is the zeitgeist, isn't it? AI is amazing at processing vast amounts of information and summarizing it, as you've alluded to. The problem is the quality of the information it's looking at. And so if you ask too much of it, if you ask it for an opinion, if you ask it for a view, you need to be incredibly confident about what it's consumed to offer you that opinion. Um, it is very, very difficult. Local language models are really good, where you populate the database that it's going to search and you're confident of everything that's gone into it. It's clearly got a massive purpose in that respect. It's amazing, kind of time saver. As James alluded to earlier, you can, get through so much more research utilizing AI tools.
Yep.
I think depending on AI for a view without controlling what it's looking at. And again, I'll just could talk all afternoon about it, but the couple of observations we've made recently, and one of them is I attribute to James, actually, to his credit. He said in a conversation we were having about it, I don't think he realized the significance of what he said at the time. AI just can't be cynical. And I talk at a lot of conferences about AI, and one of the observations I make is that when you read something written by AI, it is utterly compelling. It's 100% confident all the time of what it's telling you. It's the way it writes. Every one of the AI models writes in the same way, really, really confident. But it absolutely doesn't take into account what humans can do, which is balance, qualify. I haven't seen as much as I'd like to see, and therefore I'm not as confident as I would be. And that is the point James made. It's not capable of being cynical. So I'll hand over to James because he deals with it day to day, day in, day out. But I think you've touched upon probably what's worthy of another podcast entirely, talking about AI and the role
Indeed.
it has to play.
yeah, no, I mean, I've spent a lot of time working with, obviously like basic, just chat AI, and a lot of time with kind of the specific proprietary applications that are used for our industry, and across them is that same point about and we'll go back to the first brand's example of if I ran this guy through it, it would tell me he's great. It would tell me he knows a lot about which auto parts to go in which car. Like that is the kind of limit to which it can give you stuff from. And so particularly when it comes to commercial due diligence, everyone out there will have articles extolling their praises. Their LinkedIn will say they're a great, XYZ, and that, these people recommend them, and this, that, and the other. And their website will say this. And just by sheer volume of kind of made up endorsement, they can effectively overwhelm even the kind of proprietary, like really specialized stuff that is supposed to be very good at this. Whereas I can, look at this and immediately, like much faster than the AI can immediately go, this is nonsense. This is so useless to what I'm trying to answer. And I think that kind of, it's in particular the degree of source scrutiny and the kind of, the very, history graduate degree kind of, what does this source mean and why is it telling me this? And only from there can I start to build my conclusions. And so that kind of mixture of cynicism and understanding the context within which each source exists is something that so far I've been massively underwhelmed by in terms of AI, which I think is actually increasingly really useful at some of the other parts of my job, concerningly. But that stuff, it just hasn't, and I don't know what, I'm no specialist. I don't know. Maybe it will be able to do that in the future, but at the minute it's really, really lacking in that ability to the kind of human context within which I read all of the things that I read that underpin my analysis.
Before we jump to some final fun questions, a little rapid fire as we end. I mean, just broadly speaking, obviously, when we think about some of these fraud issues and contagion in the market, I think, James, you mentioned inflection point in private credit. I mean, does finding cases like these ultimately help the market? Because these are a handful versus hundreds and hundreds. And it maybe can adjust things before we get to a full contagion. I mean, that's why, you guys do what you do. I mean, that's the name of diligence, is to catch it before we get to a really bad place. But ultimately, stuff like this does and is healthy for the market, I would think, right?
Yeah, I was thinking that as we were talking earlier on, that the private credit market lacks the kind of Hindenburg research that the equity markets has. The short sellers, the kind of exposures. The equity markets are implicitly a bit more liquid and a bit more kind of, there's people on it looking for those kind of holes. Whereas private credit, clearly, you don't have the same liquidity in play. You don't have the same kind of, what would it be? The kind of, you don't have people exposing those, incentivized to expose the holes. Yes, I think you're dead right. Finding a few kind of corrects everyone. They then ask better questions. They look harder. They recognize they don't want to be another, kind of first brands. They don't want to be another green sale. But the other reflection I've had is that, fraud and this kind of thing is as old as the hills, isn't it? It's as old as lending itself. So, we would be ludicrously arrogant to pretend that there wasn't going to be another one next week and another one next year and another one after that. And we're all going to sit around again in a year's time going, oh my God, how did no one see that coming?
Yeah. What did we miss?
Bernie Madoffs, you kind of, it just goes on and on, right? So you're always chasing your tail. And yes, hopefully this type of, kind of story helps the next one not happen and protects all our pension funds. But there will be another, and we won't know where it's coming from.
Yeah. So we have just a couple of minutes left. I'd like to end with some fun questions. So first one, favorite sports team and/or hobby?
James, you go first.
I am a fanatic for the Northampton Saints rugby union team. Might be slightly alien to most of your listeners.
Yeah, probably a little bit. Russell, any favorite sports team and/or hobby?
Oh God, I am cursed with Leeds United. So I grew up in Leeds, and everyone around the world who's a Leeds United fan will know what I mean. The highs and lows of supporting Leeds United. So yeah, Leeds United.
Tell us one surprising thing about yourselves.
I'm learning to play tenor saxophone, so it just shows you're never too old to try and learn something for the first time. And
Interesting.
my family hate me for it.
James?
Well, I'm so disappointing, unsurprising. But on the same note, I was once a very talented singer with a very high pitched voice.
One book that you guys would recommend reading.
110% Matterhorn by Karl Marlantes. And that is have you read it?
I have not.
It is unbelievable. He was a US Marine in the Vietnam War, and it took him 30 years to write this book. It's fiction, but it's based on his experiences in the war. It's the kind of book, it's 700 pages. I started reading it. I went to sleep at 3 o'clock and woke up at 4 o'clock to finish it. Unbelievable book.
Wow.
Absolutely unbelievable. It's a great book.
I mean, I was going to go with Moby Dick, but I think more specifically on Adam Tooze's Crashed. That was the thing that really got my head around financial markets and financialization and how it all goes wrong. So on the note of this podcast, seems to make sense.
Most exciting part of your job.
Well, it's definitely not the train journeys into London, that's for sure. I tell you what, it's things like First Brands. It is genuinely, we did that piece of work, we forgot about it. It had a good outcome for the client because he separated away from Patrick James at the time. But we never would have known any more about it had it not been then the Financial Times and the article where we went, holy moly, look at this. So
Yeah.
that's the kind of exciting side of what we do is, when it blows out into open source and it's the subject of global news coverage, it's really, really good fun. That's great fun.
Yeah. I mean, the kind of, you just get this incredible thrill of the chase of oh, I think we've got something here, and you dig and you start putting things together, and it just once you grasp it, it does feel pretty cool.
And then final question, one prediction for the next 12 months.
We win the World Cup, first of all.
Yeah, right.
That's absolutely 100% going to happen. Then we'll go regime change in Iran and Cuba.
Wow, big handful.
No.
I'm going to go, there will be another First Brands in the next 12 months. None of us will have seen it coming, and everyone will say, why not? I was going to say there's going to be a run on AI. But man, that would be a brave statement given the billions that are going into it. You almost look at the investment going on there and just think it's similar to First Brands, where everyone's on the kind of merry-go-round and they can't afford to get off it.
Indeed. Well, gentlemen, I really appreciate your time. So thank you for joining me, Russell and James. Wish you guys continued success, and maybe we'll get you back sometime in the future if there's another First Brands and you guys uncover that one.
Brilliant. Thanks, Todd. It was great talking to you.
Yeah, really appreciate it.
Thank you very much. Really enjoyed that. Cheers.
Thank you for listening to the Credit Clubhouse podcast. The Credit Clubhouse is brought to you by Deal Catalyst, the leading capital markets events and market intelligence company. For more information on Deal Catalyst events, surveys, and a whole lot more, please head to www.dealcatalyst.io. Thanks for listening. Until next time.